Let's do some trading. Let's talk some stocks with Alan Nutman, Chief Market Strategist at BullseyeOption.com. Here with us in studio. Another Monday with a big week ahead of us here, Alan. How you feeling?
A lot of earnings. A lot of earnings. Markets continue to make new highs. More money, more money, more money, and more momentum. You've got to respect the momentum. It's that simple.
Don't fight the trend.
Don't fight the power.
Yeah.
It's in a lot of aspects of your life. Don't fight the authority and just go with the flow.
Who's the authority here? The Fed controlling the soft landing, or AMD this week telling us that AI is taking over the world?
I wouldn't say it's controlling. I think it's finessing the soft landing. So there's a 50-50 chance of a cut in March. But
you think that matters for stocks right now?
I mean, I think we're looking at the end game. The end game is rates are no longer going higher. Okay, so we all agree on that. The pace of the cuts, that's the eternal question. But we know that over time, the markets are telling us that we're coming back down to 4% in short-term rates. So, that's great. We're holding above 4% in the 10-year, which I think a push below and a push give the dollar a little bit of a decline, that could be the next catalyst here for the markets.
The notion that hikes are done, I do think that's more important than when and how many cuts.
Right, exactly. But, I understand people. There's been a crazy frustration about people. They don't think the Fed is giving good enough signals over the last couple of years. I mean, they couldn't have spelled it out more that they were going to raise rates. They were going to, slow things down a bit. And now they're getting to this pause point. I mean, it's pretty well spelled out. Look at what the markets are telling you. The markets have had it right. If you look at the interest rate markets, the markets have had it right for the last couple of years. It's not that hard to go with what the markets are telling you because they've had it right.
Do you think that that's going to be kind of the pecking order of catalysts this week, Fed number one, or do you think Apple, AMD, these big giants are going to be more important at this point if, cuts are a certainty to some extent?
Well, they are a certainty. I mean, it's just a matter of when, not if. Just like S&P 5,000, we talked about that. That was what we're 100 points away from that. That's a when, not if. And in the bigger picture, I'm looking at S&P 6,000 from the technical V recovery that we've seen every time in history, and that's only 25% above. So, I got a lot of positives. Like I said, we've been in a bull market for 50 years. We've had a couple of minor pullbacks in the last, couple of decades. But other than that, we've been up and away, and you've got to understand how to use leverage properly and how to use as far as the ability to buy on dips and risk reward is the key.
You're doing a little bit of dip buying in Cisco, which got whacked on the last earnings last fall.
Yes.
How come this one's on your list?
Well, this has so many technical, and again, technical trading is kind of a Rorschach test. What do you see out of it? And so this is a stock over the last 5 years traded between 40 and 60. So it's been sideways. It's above the midpoint at 50 now, so you should see a pop to the range top of 60. Right now, we're 10% off the highs that we had in September, and we're 20% down from the 2021 top. So from risk reward, this is a stock that's up 7% in the last year versus the NASDAQ up 45%. So a little bit of catch up. This is one of the big boys. I'm seeing the leverage buying accumulation, which I look for as an indicator. It's a money flow indicator, so it's not just me. I'm piggybacking on the big money. And so we've got a double bottom at 46. So a lot of things add up for risk reward. Apple's going to lead the way. NVIDIA's going to lead the way. This guy has to, this is an old school, like me, old school tech stock.
Hey, we've had some good old school tech stocks lately. IBM, Intel. Then Intel gave back a little bit on
Make
their
old
earnings.
new again, huh? How about that?
All right, that's not bad. That's not bad. It's almost closed the gap from last earnings, so I guess that's a good thing.
Exactly. So it's had a stair step where it's had higher lows and higher highs, so it's closed the gap. Now, what it's done here is there's another gap up above at 55. And it traded between 51 and 54 for 3 months in September to October, November. So we're back inside that range again. So breakout of the range targets 57. So I've got a lot to look at here. So the way I'm looking to play is I'm buying the April 47.5 call.
Okay.
So 47.5 calls trading for about 5. So
that's way down there.
So, well, it's got a double bottom at 46. So but it's got that 80 delta. It's got 3 months of time. So, the 550 on there. So it's the expiration's about $1 away. The expiration break even anyway is about $1 away. Mm-hmm. And if we get up to 58.5, the option gains 100%. So it's about math, it's about leverage, and it's about risk reward.
Okay.
And I'm a big believer in tech, but I'm not going to chase the big dogs. I'm going to jump on board somebody that's established a nice bottom, a nice reversal, and has more upside.
$3.50 to double your money, basically. But it's a pretty hefty trade to put on, right? $550 because it's way in the money.
Well, yeah, it's $550. It's like being long for 47.5. If I said, hey, I got some shares of Cisco from 47.5, would you like those?
Right.
Would you like those?
Pay a premium for
If
them.
I handed them to you, the expiration break even's $1 higher, so I'm paying $1 for that time.
I would have liked to have already had them.
Well, I can give it to you right now. You can be long for 47.5 right now, and it's going to cost you $500, but it's already in the money.
Yeah.
Well, already deep in the money.
All right, like it. Looking for Cisco to close that next gap. Ideally up near the mid 55s.
Yep.
Hanging on a Palantir, came off a couple bucks since the trade about a week ago.
Yeah.
So.
Is it a June option? Yeah.
Sticking with it?
Yeah, I think it's a June. What month are we in right now, my friend?
We're about to be in February.
No, we're not. So you can't say we're already. We're not. This is not the future show.
Don't add on days
This
to an
is
options
not
guy.
the future show. You're not looking into the future. We're talking about the here and now. And that's why I trade the way I trade. I was looking at my.
You generally stick with these through expiration.
Yes, I have. Oh yeah, I have what I call lifestyle options. I'm taking time out of the equation because I'm buying deep in the money options that are going to act like the stock, and I'm buying plenty of time to ride through the ups and the downs. Now, from a risk reward standpoint, I look at the markets more on a weekly basis to make decisions or bi-weekly basis, and that's why I have my little cheat sheet here to see, like crude oil was up $5 last week, gold was up, whatever it was. I look at things in the big picture. I don't worry about day by day or even week by week. I use options to be able to have that staying power.
All right, the long-term Cisco trade. Thanks, Mr. Nuckman.
Thank you.
Appreciate it, Chief Market Strategist, bullseyeoption.com. Looking for that S&P 6K, but Cisco in the 50s first. All right, when we come back, let's talk some real estate. We discussed the China problems so far this morning. Let's talk about the U.S. and how to figure out all that empty office space, the difference between commercial and residential.